Yadav joins now, Director IRB. Let's take a conversation forward to understand that toll revenue, which was up 26%. Is this an indication of economic activity and this kind of a robustness? Will it continue? Good morning. Thank you for joining us. Now, the toll revenue was up 26% year on year in December to about 500 crore. Is this largely because of high traffic or new BOT projects?
Thank you. Good morning. And this was on account of both high traffic also and addition of the project. If we compare with the November, we declare numbers on a monthly basis. In the November 2023, the growth was around 20%. And that has increased 26% in December 23. So that is only because of the increase in the traffic. And in December 23, we have observed around 26% growth as compared to December 2022.
Addition is coming. How much growth has come largely because of new, and how much growth has happened to existing? Can you be specific with the number here?
Yes, so then if I will compare the growth in the December 23, the growth was 26% and November was only 20%. So 6% was growth on account of the volume in December alone. So that was the kind of 6.5% kind of volume growth we have witnessed across the portfolio.
Right. But Anil, are you also expecting any hike in toll rates from NHAI for the new fiscal?
So typically, most of the NHAI projects are linked with 3% fixed plus 40% of WPI, and rate revision happens on 1st of April every year. So 1st of April this year also will have a tariff revision as done in the various years in the past.
Tell me, what's the current order book looking like, and what are the orders that you have in the pipeline?
The current order book, including O&M, is roughly 33,000 crores. Out of that, 10,000 crores will be executed over the period of 2.5 years. That includes the EPC order book and the O&M order book, which is executable over the period of 2.5 years. And now coming to the new order book, as we spoken last time, now there is shift in the mode of award. And most of the project, as against 5 to 7% projects on BOT mode earlier years, now that has changing significantly, and 40 to 50% will be on a BOT basis. And the government on the NHAI website, there is almost 20 to 25,000 worth of project is already to be bidded out on BOT basis in next couple of months. Secondly, we have unique proposition as far as BOT projects are concerned. We have private InvIT in place where IRB has 51% stake and Government of Singapore has a 49% stake. So that reduces our equity contribution. If the project typically funded 70-30 debt equity, out of that 30% equity, we have to infuse only 15% as equity. And we generate all the EPC and O&M of these projects are executed by IRB, and we generate healthy margin of around 22 to 23% on these projects. And our equity portion can be contributed out of the margin itself. So then we historically also we were eyeing for the more BOT and TOT, and now considering we have a lean balance sheet, we will the shift of the government to for the more BOT project will definitely help the company.
Okay, fair enough, Mr. Yadav. Morning. So what about the pace of ordering? Because I understand pre-elections, it generally slows down. Is that something that you're witnessing right now? Will that impact your order inflow target that you spoke of?
I think your observation is correct. And there has been slowdown in terms of award as far as EPC and the HAM project is concerned. And this is not because of the election. It's because of there is restriction on borrowing of the NHAI. And the government focus is more on private participation. And we are going to see major shift from the EPC and HAM to BOT and TOT, and which we have already witnessed in this financial year. And going forward, also it will be predominantly more of BOT and TOT. And the player who has lean balance sheet will definitely benefit out of this change of the shift of the award activity. And I think there is sufficient number of projects on a BOT basis to be bidded out in next couple of months.
All right, really appreciate your time. Thank you for joining us. Markets, what